Shares of the cloud software company Fastly are trying to bounce back today after a pretty aggressive sell-off yesterday that sent the stock down more than 25%, sparked by an earnings report, well, that left some investors wanting more. Fastly saw total revenue rise 35% last quarter on a year-over-year basis to almost $85 million, but its adjusted net loss deepened to $14 million. That was about $6 million. That was about a $6 million shortfall. Joining us now is Fastly's CEO, Joshua Bixby. Joshua, thanks for making time for us. So let's talk about those results. What hurt profitability last quarter, and are there indications that things are turning around this quarter?
Indeed, it's an honor to be back. Thank you. Those were really strong numbers in the quarter. We hit 35% growth. And I think one of the things that we're seeing as we exit the haze of this pandemic and look out through Q3 and Q4 is we see two types of companies. We have the masks and plexiglass companies who benefited from COVID, but as we reopen, which we absolutely are seeing and intend to see over the year, they will change their future. If you look at Fastly, we actually said not only did we grow 35%, but we also are going to continue to accelerate in Q3 and Q4. And that really sets Fastly apart from these other COVID type businesses. We are in the business of delivering secure and fast web and internet for everyone. And when that's the case, when you see the likes of Spotify and Shopify, you see the New York Times, the leaders in the world using our product, I think what we're seeing is very strong opportunities for that growth. Fastly's not a COVID stock, but we're in a new era here where the internet is becoming central. It's the axis upon which we rotate. And the internet stocks have seen that we need a new architecture. The internet of the past isn't going to fulfill the needs of the future. And so we come out of it feeling very optimistic.
Joshua, I want to ask you, what are the plans of Fastly going forward to keep that growth strong, given the fact that throughout the pandemic, you saw so much growth, saw so much revenue being pulled forward?
Yeah, what gives me so much confidence is seeing what we are seeing both in the funnel and in our customers' behaviors. I was on a call with a CTO of a retailer who said, they got 500 stores, and they said, obviously the pandemic was difficult and the website became even more important. It was a place where people were flocking to. But as they've already seen reopenings in countries, what they're seeing is that isn't changing. In fact, it's accelerating. And I think that really speaks to this new era. What we've seen is habit changes. So as the haze of COVID comes off and we all start reassessing how we want to live our lives, the conveniences of the internet, the ability to shop online, the ability to have entertainment come to us, our food delivered, all of those things are habits that have not only changed just for the pandemic, but are changing for the future. And that gives me tremendous confidence when I think about the brands that have come to Fastly. They're the leaders. And as organizations have to digitally transform, which is a huge impetus, what we see is they're looking at the leaders and they're choosing the technology stacks that those leaders have pioneered. And so when I look at us, we only have 300 odd enterprise customers. Our largest competitors have tens of thousands and hundreds of thousands. So when I look at this opportunity, it is the time to invest. All of the trends that we're seeing from online and low latency gaming, the tailwinds from 5G, everything that's resulting in immersive experiences, all the shopping we're doing, every single thing that's transforming in our world, all of that is on the internet, and it all requires speed and security, the two things that Fastly delivers.
I want to talk about security in a minute, but first I'd like your take on what we saw today, and it could be a reason why the stock is coming under some pressure. Cathie Wood's ARK FinTech Innovation ETF actually shed about 1.5 million shares, so a pretty big stake in your company. You just laid out the case for why there's a lot of opportunity ahead for Fastly, but what would your message be to prominent investors like a Cathie Wood who actually just sold a bunch of your stock?
Yeah, I mean, I see the same numbers you see, and we're certainly honored to have the investors that we have. I think my message is very clear. We're coming off a 35% growth quarter. We have over $1 billion in the bank. There are 1,000+ Fastlians every day who are making the internet fast and secure. And when you look at what's behind these trends, the future is going to look very different. The future is going to be one where every brand has to become a technology company. They all have to digitally transform. And developers who are embracing this world of digital transformation, those are the buyers of Fastly's security and delivery products. And so I think the future is incredibly bright. The world is changing, and we're in the early parts of that.
And real quick, in the 30 seconds we have left, talk to me about security. What steps are you taking to keep your clients' information safe in the cloud? Perhaps more than ever during this pandemic, we've realized just sort of the weaknesses that the internet highlights.
We certainly have, and I think those weaknesses, as I say, need a new roadmap. So that new roadmap really starts with understanding that security is the most important thing. We have to be secure. We have to bring that to our customers. So we take privacy and security very seriously, and the steps that are necessary are to constantly understand that on the other side, we have programmers who as the enemy are constantly also transforming. So we can't take a break. The number of attacks are rising. The size of the attacks are rising. We have to remain vigilant. You need the best people and you need the best technology. And that's really what we provide.
All right. Fastly CEO Joshua Bixby, thanks so much for making time for us today.